Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye, Chief Investment Strategist for ChartsandMarkets.com. Welcome back to the show, Bob.
Hi, on this rainy Friday.
And I'm just saying, if we're getting little snow flurries in Vancouver, to all of our neighbors to the east, look out.
Oh, I looked at the snow extent cover for North America, and it shows a band of typical highs and lows, standard deviation band, and this time of year it's going up, but the actual snow cover is going straight up, way above the high side of the standard deviation band. So it's happening, and it takes two things for extensive snow cover: cold and precipitation, and that's it. So, fun start. And just outside of Vancouver here, one of the passes going up is closed because of too much snow.
As usual, we have several questions from our listeners, so we'll wade straight into those. We have a question from Cecil, as you like to say, or I'll call him Cecil, and that way we have him covered from both angles.
Yeah.
He asks, I just heard today that the U.S. Fed has printed some 22% of all money ever brought into existence in the past 10 months of 2020. How is that not massively inflationary? I know you're predicting deflation in the coming years. How do you resolve that apparent paradox?
Yeah, good question, Cecil. And there's no question that the Fed is increasing or accommodating the markets in order to bail things out. But the huge inflation that inflationists are expecting is always based on what happened in the Weimar Republic in Germany in 1922 and 23, where they had destroyed the credit markets and they were actually printing the stuff like in Zimbabwe. But in Canada and the United States and England, you have well-established credit markets that would have to be absolutely destroyed before the corrupt government eventually goes to actual printing press money, as in the Weimar or as in Zimbabwe or even in France in 1797. So the society would not stand the destruction of the credit markets. So actual printing is not going to happen. But then what we should do is look back in 2007 when the Fed did a major accommodation then, and you still ended up with the worst recession since the 1930s. In 1929, economists all bury the fact that the Fed was remarkably easy, it bought bonds out of the market, and also with the 1873 bubble, the Treasury bought bonds out of the market. But so when you finally complete a financial bubble, each has been followed by a long period of deflation, falling prices from time to time, and as the whole credit bubble is unwound. So the problem will be servicing debt. So I don't see this as launching to the inflation that inflationists treasure is coming out of the Weimar Republic, and at some point this hot speculation now will roll over, and then I will stay with that we will then be followed by post-bubble contraction.
We have a question from Henry Solomon in El Paso, Texas, and of course we both want to sing that Marty Robbins song about El Paso. Terrific hit back in the 60s.
Yeah.
So Henry asks Bob, what is Dr. Copper trying to tell us these days? Copper has sometimes been described as the metal with a PhD in economics. Copper's gone up in price from about $2.71 in October 2019 to about $3.18 in October 22nd, 2020. Is this price rise due to either the continued advance of the economy in mainland China, speculative buying of copper by traders in China with deep pockets, increased residential construction activity in the USA due to low interest rates, the possibility of increased CPI inflation in the U.S. due to the dreadful prospect of a more socialist-oriented federal government in the USA as a result of the upcoming election in November, or perhaps a combination of all of the above. In your interviews, you've maintained the position that deflation is the more likely prospect as a result of continued economic contraction. Will Dr. Copper take a great fall as did Humpty Dumpty? By the way, I have great respect for the nation of Canada, which deployed an outsized share of its people to fight against the forces of Axis tyranny in World War II. Regards, Henry Solomon, El Paso. And I have to say, yes, no other country put more people in uniform than Canada, per capita than Canada. Over 1 million people in uniform out of a population of 10 million at the time. And without the Canadian Navy escorting supplies to Britain, they would have starved to death as the U-boats.
At the end of the war in 1945, Canada had the third largest navy in the world.
Yeah.
But anyways, copper. Dr. Copper, I think that Henry's got a number of the points that could be applied for driving the price up, but underneath it is the industrial commodities got whacked extremely hard into the end of the March panic. So you'd get a rebound out of there, and also the spike up in lumber was absolutely extraordinary, over $800. It's now back down to $400. No inflation there in the last month. So, anyways, but copper's acting very well. It's becoming a little overbought at some overhead resistance, and I think part of the drive is the same thing that hit the lumber market, is that people in the U.S. are leaving the dreadful core cities, moving out, and it's accompanied by house builders building a whole lot more houses and fixing up and all that sort of stuff. So there has been a pickup in demand for these industrial commodities, and I can't make the call that copper is poised to roll over, but it is getting overbought. Ben Henry, thanks for your question.
Also, Bob, a factor, the demand for electric vehicles. General Motors announced that it's going to sell an electric version of the Hummer that's worth $113,000 American. That's $500,000 Canadian, isn't it? Anyway, it's the most expensive production SUV ever. It's sold out in 10 minutes. Yeah. Now, it's 1,000 horsepower, and its wheels actually turn completely sideways, so you can just slide into a parking spot. And somebody said with 1,000 horsepower, you need a truck that big to carry all the batteries.
Yes, so. Yeah, no, electric motors on every bull market for copper, for as long as I can recall. People always drag out, and there will always be a new use for copper in various sources. But the same thing happens, is that ultimately it'll be subject to the business cycle.
We'll have more questions for Bob Hoye when Bob Hoye returns.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Bob Hoye. We have a question from Andrew in Germany. In Germany, we keep getting told, especially by the health minister, that if we don't follow the rules, the virus will spread, yet ironically, those measures fail to protect himself from getting it. Meanwhile, Austria plans to outlaw face shields. I presume the thinking is that transaerodynamic cloth is superior than hard plastic. Transaero, I love that term. Bob, the theories politicians espouse seem very similar to those of the central bankers. Have these two classes of people historically attended the same schools of nonsensical thought? Kind regards, our buddy Andrew in Germany.
Andrew, that's a good one. The same schools of nonsensical thought. Yeah, the economists mainly study the same stuff. And then which is interventionist economists, because one, it gives intellectuals a feeling that they can, a tool by which they can think they're influencing policy. And the other thing is that the governments will choose whatever economic policy that enhances their power and the take from the economy. And this is where Keynesian economics has been very useful. But now the question started with the virus and face shields. I saw a medical doctor video here recently, just a short one, and he had a number of face masks from the least expensive up to the ones that would be used in surgery. And he had one of these vaporizer cigarette things, so he'd take a big inhale and then breathe out normally. Well, my gosh, the amount of vapor that came out through the mesh and through the sides was incredible. And he says they're absolutely useless. And whereas the top high-tech ones, they need them in surgery, understandably. But so everything's gone crazy out there. And but I like your thought about the central bankers. They've all taken the same courses. The only thing they know is that if they inject credit into the markets, it will drive the economy up. And that, in logic, is called a primitive syllogism, because on any business expansion, credit expands, but one doesn't cause the other. And the major failure in interventionist economics is the notion that a specialized team can manage a country's economy. And that assumes that each country is discrete from any other country. Now let's just take a look at the long border between Canada and the U.S. and to imagine that our Canadian economy is not connected to the U.S. and therefore is a single entity that can be managed by the Bank of Canada, our central bank. No, it's absolute nonsense. And Andrew, thanks so much for your prompting question.
Also, Bob, you have pointed out since the Fed was invented in 1913, we are now in the 19th recession. So much
Jim,
for their...
That's the classic. You know, the great American physicist Richard Feynman said that no matter how brilliant the idea is and no matter how qualified the theoretist is, if the theory is not confirmed in experiment or practice or results, it doesn't work. So the financial types, bankers and politicians in the early 1900s, fully understood that if you had a financial crisis, it would be followed by a recession. That's the way it works. And so then they came up with the theory that the Federal Reserve would be a lender of last resort. It had the magic amount of cash to come in and rescue things. So, but this has been fully practiced and fully believed in. And then also when I came into the business in 1963 and was working for then the premier investment dealer in Canada, and I remember in the research department in 1964 or 65, that was when the buzz came that now that economists had computers, and that's probably when macroeconomics started, that then the computer models would help the central bankers manage the economy. So in my experience on the street, I did hear the tout that there would be no more recessions. That was in 1965. So here we go now. With the current recession, it is number 19 since the Fed opened its doors for business in 1914. The theory does not work. Period.
Michael in California has two questions for Bob. The economic policies of the Green politicians in Ottawa appear to have had a negative impact on the energy-producing economies of the western provinces. Is it possible that Alberta, sometimes referred to as the Texas of Canada, break the economic leg irons imposed by Ottawa and break away from the Canadian Union? If so, could Texas become the Alberta of the USA? And by the way, polls in Texas finds that about 39% of Texans believe they should go back to being a separate nation as well. A second related question for Bob. The energy producers like BP seem to be at decade-low valuations. At these valuations, are oil and uranium producers good long-term investments, or should we wait for a further sell-off in the equity markets?
Oh, yeah. We're in a climate where long-term investments, that may be a harmful idea. You just can't imagine. The only thing long-term is that in every post-bubble contraction in the past, the real price of gold went up, and the gold sector enjoyed a bull market when the orthodox investments were not doing so well. But here on Canada, there's absolutely no doubt that the Trudeau government has been trying or intends to eliminate resource production and transportation in Canada. It's not just oil and gas. They want to shut the whole thing down, and it's basically going along on that hydrocarbons and CO2 are very dangerous items. And the other part of this is just control freaks at work, using whatever issue they can to invoke fear amongst the population. And then, of course, it's always a fear that is so severe that it's going to take government to fix it. Oh no, this is a classic scam by authoritarians, and here living in Canada, it's difficult. And but the prospect of Alberta separating would be fascinating. And could it be? It's sort of like the Texas of Canada. And the other thing is that way back in Roman times, of course, the closer you got the government in Rome, the more authoritarian it was. But in the north, the northern tribes, the Anglo-Saxons, were quite dedicated to freedom. And there were various times when writers in Rome said how much the Roman people admired the northerners for their innovation and thrift, suggestion ideas like that. So you can have a comparison where the difference between the huge city of Rome and the outlying provinces in the north, German provinces, would be the same as between Washington, D.C. or Boston or New York compared to Texas. So let's put it this way. The northerners in Roman times were good guys, and the guys in Rome were bad guys. And the same thing compares now. Texas are good guys, and the eastern seaboard are the bad guys. But enough people are figuring this out, and I think there's another phase of the popular uprising going to come in here. So thanks for the question.
We'll have more with Bob Hoye right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF.
surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, what are the headlines you dug up today? NASDAQ shorts crushed by second largest short squeeze in history. What's the story there?
Yep. Well, the rise into early September was very dynamic, and the action in the high-tech stocks, the big ones in the NASDAQ, was crazy, and many professional and perhaps some amateur shorts got short, and then all of a sudden they come in. Now, the markets have been quite favorable in the last few weeks. Now, I'm guessing that it's discounting a Trump win, and then what happens next. But anyways, just never mind the news. The feature is technical, and shorts have been squeezed right out of the market, which gives you that extra bid at the top, and it takes away the extra bids you'd have as it goes down. So I think it's an intriguing development.
And Bob, another headline that you dug up from 2016, just before their presidential election.
Yeah, that was Market Watch, November 2nd, 2016. Headline: the danger to your portfolio from a Trump win is huge. Well, our work then, Ross, we just updated it now. November the 4th, the market decline was such that it came down to a downside capitulation and was followed by a sequential buy. So the market was beat up enough that you'd get a rally. And then, of course, once the street began to understand that Trump could actually start to reform big government and would also make it attractive enough for business to return, so business started returning to the U.S. and bringing money back with it. So we ended up with that fabulous bull market, which I described it as rational exuberance, which was a twist on December 1996 when head of the Federal Reserve then was Alan Greenspan, and at that time the market was on quite a rally, and valuations were high, and all the Wall Street old-timers were saying that this is, and Greenspan used the word irrational exuberance. So then, but the irony in using it the way we did 4 years ago was that it was exuberance, but it was for the right reasons. It was rational exuberance. So what have we got here now? When you have so many technical indicators at what could be around a high. So we've now gone from rational exuberance to exuberance and maybe now irrational exuberance. And we'll know which way the market is going to go within 4 or 5 weeks, I guess. So it's fascinating out there, Jim.
Thank you so much, Bob.
Good to be with you.
My guest has been market historian Bob Hoye, the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, and he loves to answer them, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.